This is Horizon's Middle East and Africa. Our top stories this morning. South Korean policymakers urge for calm in the financial markets after the political upheaval in the nation. President Yoon Yeol is reportedly set to face an impeachment vote as early as Saturday over his shock declaration of martial law. France plunges deeper into crisis. President Emmanuel Macron now seeking a new prime minister after a no-confidence motion against his government was passed. Shares in Asia rose while currency markets showed relative calm as traders digest the effects of political crises in France and South Korea. It's just gone 8 a.m. across the Emirates. It's 3 p.m. Thursday afternoon here in Sydney. I'm Paul Allen, in for Jemima Besetche, who's on assignment today.
And I'm Jennifer Zabasaja in Johannesburg, where it has just gone 6 a.m. Welcome to Horizon's Middle East and Africa. Great to be with you, Paul.
Sure is. Let's take a look at how markets are tracking at the moment. We'll start with S&P futures. It was a really good day for US markets on Thursday. We did, of course, hear from Jay Powell as well, suggesting the US economy is in good shape. But if we take a look at the Kospi, it's kind of off the pace today, which is perhaps not surprising considering some of the political turmoil that we've seen in South Korea. We're also getting mixed reports as to whether or not we're going to hear from President Yoon a little bit later on. We'll discuss that story later. We've got a slightly weaker yen, although it has been strengthening against the US dollar. And as I mentioned, S&P futures are kind of flat at the moment after a big tech-led rally yesterday in the US. Bitcoin also making headlines for obvious reasons. It recently hit 100,000, finally breaking through that psychological barrier. We did get the news that the new chair of the SEC is going to be Paul Atkins. He replaces Gary Gensler, who's really walked before incoming President Trump had the opportunity to fire him. There is still a bit of confusion over exactly who's going to be driving crypto regulation going forward. But there we have Bitcoin at 103,353 now. Okay, let's check in on how markets in Asia are faring. Avril Hong's in our Singapore studio. Avril.
Yeah, Paul, we're seeing a mixed bag. I mean, Asia's stock markets and other parts, aside from Korea, mostly running higher, tracking Wall Street's gains. It's not just the outlook for Bitcoin we're keeping an eye on. Of course, it's also the outlook for the U.S. economy. And Powell's comments at a recent event sounding very bullish is adding to the optimism. So some gains in Asia stocks. But of course, among the sectors that we're watching in South Korea as we continue to keep an eye on the political turmoil in the country are the bank shares that have really been bearing the brunt of the selling amid the question swirling about what we might see from the important Value Up initiative. We have the likes of JP Morgan saying, you know, this is a buying opportunity. They would take the chance to add to that, buy these bank shares. Meantime, overall, the South Korean stocks are stabilizing a little, as is the Korean won, following on from the turmoil in the markets on Tuesday, guys.
Thanks so much. Avril Hong in Singapore for us. We'll check back in with you in just a bit. Let's stick on South Korea, though. South Korean President Yoon Yeol is reportedly set to face an impeachment vote on Saturday after the fallout from his martial law debacle. Meanwhile, the Bank of Korea is optimistic that market volatility will gradually cool down. Let's get more with Asia economics reporter Katya Dmitrieva, who is joining us. So, Katya, we just heard Avril saying that there's a relative calm right now with South Korean assets. Talk to us about what authorities, though, are communicating right now to the markets, given what's been happening over the past 48 or so hours.
Yeah, rapidly developing situation still, even about 24 hours after debacle is the right word. Martial law was imposed and then quickly lifted. We have officials really from the finance ministry to the Bank of Korea really trying to maintain calm. So we had Bank of Korea governor yesterday, as well as statements this morning reiterating that there will be unlimited liquidity to support the market if needed. There's also the possibility, or at least in deployment in the background, 10 trillion won of potential stabilization fund that could be deployed, again, if needed. So both officials have really tried to maintain calm because for the past 24 hours, we've had the cost be dropping further, recovering just a bit. The won, still the worst performing currency in the region, and a lot of questions still remaining in the political sphere, including who will be president in the next couple of days, potentially.
Have we heard from the president at this point in time? We mentioned that he's potentially facing this impeachment vote. What, if anything, have we heard?
We haven't heard from him directly yet. He might be speaking later today. But what we do know is that his party is not going to let him go without a fight. We had the head of his party, the PPP, saying that they plan to vote against the impeachment motion. So that is currently scheduled for Saturday at 7 p.m. at the latest. And officials, the leaders of the opposition Democratic Party, as well as the broad coalition, the opposition coalition, has said that this violated the Constitution and several other laws. So they're seeking impeachment as early as the next couple of days. His party said they'll be voting against it. And the opposition does need at least 8 members of his party to vote and join them for this impeachment to go through. So whereas yesterday we saw a few members of his vote in favor of lifting martial law, it's kind of an open question now again whether that impeachment will even go forward.
Wow. Rapidly evolving situation. Bloomberg's Asia economics reporter Katya Dmitrieva, thanks for joining us.
Well, Emmanuel Macron is looking for a new prime minister after the far right and left united in France to push through a no-confidence motion against the government. The French president needs a premier who can pass next year's budget through a deeply divided parliament. He's set to make a statement at 8 p.m. local time this evening in Paris. Well, let's get more from Bloomberg News desk editor Jill Desis. So, Jill, Emmanuel Macron has, his term runs to 2027. He's already said he's not going anywhere, but less than ideal circumstances for him going forward. What's the message going to be tonight?
Yeah, we'll have to see what Macron ultimately says during this address, Paul, but it's very clear that he severely miscalculated when he called that snap election earlier this summer. Ultimately, he was looking to consolidate more power to try to present a stronger force against Marine Le Pen and her far-right party that obviously did not go well for him whatsoever, was really a disaster for the centrist president. Marine Le Pen now has, even more power, and really through the fact that this no-confidence vote was successful in consolidating both the far right and the far left against Macron's party and his coalition, really kind of shows you that there's not a whole lot of power that Macron can ultimately, sort of surface here. So at this point, we're going to have to hear from him about what exactly is the next step in terms of who he may be nominating. I will remind everyone, though, Paul, that it already took a couple of months to even find Barnier to put him in this position in the first place. So it's a really, really difficult road for Macron, and it's really difficult to see, at least now, the earliest that he can ultimately call another election is next June. At this point, it does seem like we're in for several months of, some turmoil here, and ultimately there's just really not a clear direction for where he takes this here.
Yeah, very difficult situation. And as you say, the composition of Parliament is not going to change until the middle of next year. So what does any future coalition look like? And we've already seen other parties working to keep Le Pen out of power. Does that change?
Yeah, so we'll have to see what the coalitions ultimately look like here. You're right, Paul, in that, there's several parties that, don't necessarily want Le Pen to consolidate even more party. But at least at this point, it does seem more likely that Macron is going to have to sort of, concede to some more of her, demands or requirements than he is currently doing. Because at the end of the day, it's really Macron that just doesn't really have a whole lot of power to really work for within this parliament. I will also say, Paul, I think at this point, the other thing to look at with this situation is not just what's happening domestically within France, but also a lot of the global implications that we have here and what that ultimately means for Macron and his party going forward, and how they deal with the rest of the EU, how they deal with the rest of the world. We have this weekend, Donald Trump, president-elect for the United States, is actually coming to Paris. We'll be meeting with Macron at that point in time, but it's really difficult to see what kind of leverage Macron actually has in any kind of conversations that he's having with other world leaders, including incoming President Donald Trump in the United States. And then you're also taking that against the backdrop of an EU that broadly looks weaker, particularly with some turmoil that's happening in Germany, when the two biggest economies in the EU right now are dealing with a lot of these political struggles. It really just doesn't paint a great picture heading into 2025.
All right, Bloomberg's Jill Desis in Hong Kong. Thank you. Still to come, we will be joined by Sara Vakhshouri, President and founder at SVB Energy International, as oil markets look ahead to today's OPEC Plus meeting. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Paul Allen in Sydney. Brent crude prices have steadied after a decline, with traders looking to today's OPEC Plus meeting, which may defer a move to revive output. Let's bring in Sara Vakhshouri, President and founder at SVB Energy International. Sara, thanks so much for joining us today. Just want to, in terms of the OPEC Plus meeting, to what degree are their supply plans really at the mercy of whatever it is that President Trump decides to do in terms of massively increasing US drilling?
Well, it's very important. You started with a very important question, because it seems that now President Trump's effect on the oil market is the wild card that creates a lot of uncertainty. But what is obvious is that when President Trump comes, we will not see a quick spike of U.S. production. Definitely, this needs an advanced investment, and also companies' decision is very much market-based in the United States. So it will take a while till some of those regulations are unwinded and some of the marginal costs reduce on U.S. Oil production, but it's not going to be an immediate, quick impact.
That said, is there an opportunity for OPEC Plus to increase production now, or is that just not a viable idea?
Well, if you look at the current market fundamentals, it's a very complex market, because we have an actual market fundamentals which no one can agree where it's heading. We know obviously about the supply side, because OPEC is very clear and very transparent about their supply. But in terms of demand, since last year, we have a huge gap between the demand expectations and forecasts of multiple data agencies. These uncertainty over demand, it has an impact on the market sentiment, and the sentiment without a data support so far has been the fact that Chinese economy is slowing down, so the demand is low. But if you look at it, it's very interesting, because this sentiment, market sentiment, even though that is not often clearly supported by facts and data or actual market, has an impact on the algorithms, pricing algorithms, and also decisions of investors. If the good example is, in the past week, we had a U.S. bank selling huge volumes of oil future contracts, U.S. oil future contracts, which immediately caused the prices to reduce. But at the same time, we are having a very high, since summer, even highest refinery run. We have U.S. oil stock, even fuel stock, diesel and gasoline being very low. So, but you see that how market sentiment has impact, especially on a paper market. And paper market was created to help and support the physical prices of physical oil to be more certain. But it seems now it's kind of creating a deviation and uncertainties when it comes to the impact of sentiment on paper markets, and then the impact of paper markets on the actual market prices.
Yeah, well, even the markets are reflecting that confusion over the fundamentals that you describe. We've got futures trading in a very narrow range of about $6. The volatility's really pulled back a lot. It's at the lowest level since August. So if you're looking for a catalyst to break out the price in either direction, what could that potentially be?
Well, for myself, if I want to look at it, I have been following the correlation between the impact of the market sentiment, which is very much run by media narratives and also the expectation in the market. And this huge gap between the expectations, especially over demand, and the forecast that are coming out of data producing agencies, the reputed ones, have created the huge uncertainty. And all these sentiments are impacting the pricing algorithms and also decisions in the paper market. So all these benchmarks that are coming out of the stock market obviously having impact on the physical market, but is this all of this based on realities in the market? Are the, for instance, geopolitical factor taken into account? Are the expectation on demand and sentiments factual and real? So there's a lot of uncertainties and unknown factors. Also, we have, for instance, sanctions that have created a cloud in terms of data overproduction and export of certain countries. Also, again, going back to that wild Trump card, there's a lot of expectation that would President Trump implement sanctions fully on certain countries, and are we going to have how much of, let's say, Iranian oil or Venezuelan oil out of the market? So there's a lot of uncertainties in the market, I would say, at this point. And I should have said, since OPEC, since COVID-19, really OPEC was the only factor in the market that gives certainty to market, because their proactive and forward announcement of their decisions have been very helpful to give certainty over expectation on the supply side. But I would say we are in a very hard and complex market now to understand really what is happening.
Sara, we've got about 1 minute left. I just want to make it harder and more complex for you. Let's talk about the security situation in the Middle East as well. The Israel-Hezbollah ceasefire, perhaps best described as fragile, and conflict flaring again in Syria. What are the risks here, just briefly?
Well, there's a lot of risk, has been there since months ago. And as you just mentioned, it just flares up occasionally. And again, that's the question. Is the geopolitical factor taken account into the prices? So where is really the sentiment and supply and demand going to go with all of these uncertainties and risks that are, as you mentioned, exist in the market?
All right, Sara Vakhshouri, President and Founder at SVB Energy International. Thanks so much for joining us. And coming up, we will talk a little bit more about Syria, the military pushing back against advancing rebel forces that are posing the biggest threat in years to President al-Assad's rule. We'll have the latest next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Syrian rebels have reportedly encircled the key central city of Hama, battling government forces loyal to President Bashar al-Assad. That's according to reporting from AFP. Meanwhile, Russia's TASS news agency says the Kremlin has been in close contact with Iran and Turkey over the conflict. Let's bring in Bloomberg's Paul Wallace, who's in Dubai, joining us. So, Paul, what do these latest moves mean for this conflict that's dragged on now for over a decade? What could we see happen next?
Hi, Jennifer. Yes, as you say, it's dragged on for over a decade, but it's pretty much been dormant, at least in terms of the bigger picture for the last 5 or so years. That all changed pretty dramatically late last week when this rebel group HTS, an Islamist offshoot of al-Qaeda, made a shock advance out of the northwestern parts of the country that they still held. They took Aleppo, one of Syria's biggest cities, and now the main battle is raging around Hama, another major Syrian city south of Aleppo. It's definitely taken the Syrian government by surprise, and they're trying to do whatever they can to stop this advance and push it back. And it's also taken Syrian President Bashar al-Assad's main foreign backers, Russia and Iran, by surprise and by shock. And they're trying to do whatever they can to stop this advance, because they would be loath to see Assad toppled from power.
Well, Paul, let's talk about that. I mean, is that what could potentially be on the line here? Could we see his hold on power really be threatened by these latest advances?
It is possible. There's still a long way to go before the rebels get to that point where they're close to achieving the overthrow of Assad or his regime. And if you look at a map of Syria and see what gains they've made, they don't look to be holding that much territory relative to the size of Syria. However, geographically, these are very important areas that they're going after. As I mentioned, Aleppo is, if not the biggest city in Syria, it's the #2 city in terms of population. It's a bit difficult to tell because of all the displacement that's happened since the start of the civil war. if they manage to get Hama, then the next city south of that is Homs. And if they take Homs, they effectively cut Damascus, the capital, and where Assad is based, they cut Damascus off from the coast, because the road from Damascus to the coast runs through Homs. So if you get to that point where Homs is taken, I think the regime is in very, very big trouble. But as I said, there's still a long way to go before that stage, and it's possible that the rebels find things much harder going once the longer their supply lines become, and the more sort of Russia and Iran and the Syrian regime is able to regroup and fight back.
All right. Thanks so much. Bloomberg's Paul Wallace in Dubai with the update there. Paul, thanks as always.
All right, let's take a look at some of the other stories that we're following. President-elect Donald Trump has picked Paul Atkins to lead the U.S. Securities and Exchange Commission. If confirmed, Atkins will replace Gary Gensler, whose focus on climate risk disclosures, crypto crackdowns and stock trading regulations drew resistance from Wall Street. Bitcoin finally topped $100,000 earlier today. The total crypto market has surged by about $1.3 trillion since Trump became president-elect. Brian Thompson, the CEO of United Health Group, has been fatally shot in Midtown Manhattan in what authorities described as a targeted attack, igniting a manhunt across the city for the gunman. Early reports suggest the alleged attacker was waiting for Thompson upon his arrival at a hotel for the company's Investor Day. The attacker approached the executive from behind and shot him multiple times before his gun malfunctioned. Jennifer.
Yeah, that's right, Paul. And let's just take a quick check at where markets are positioned ahead of the trading day. We are seeing a bit of red on the screen right now for U.S. equities in particular, and also Eurostock 50 futures. Although Wednesday was a good day for U.S. equities with big tech leading that rally. We both saw the NASDAQ and the S&P 500 hitting new records. That also coming, as we heard from Fed Chair Jerome Powell, giving his vote of confidence for the U.S. economy. Also watching closely what is happening with oil. You were just speaking earlier to our guest about that OPEC Plus meeting that we're anticipating later today. We've seen oil still trading relatively range bound, but Brent crude just above a 0.1% there at $72.39 a barrel. Also, U.S. crude output is we're paying close attention to that. That's just above $68 a barrel there. All right, now coming up, EFG International joins us as traders digest the effects of the political crises in France and South Korea. While looking ahead to the U.S. jobs print that is coming on Friday, CEO Giorgio Pradelli is with us next. This is Bloomberg.
This is Horizon's Middle East and Africa. Our top stories this morning. South Korean policymakers urge for calm in the financial markets after the political upheaval in the nation. President Yoon Yeol is reportedly set to face an impeachment vote as early as Saturday over his shock declaration of martial law. Saudi stocks are trailing emerging market benchmarks for the first time since 2020. We'll tell you why some investors, though, think next year could turn out to be better for the kingdom. And Kenyan lawmakers have agreed to reinstate some tax measures that were previously abandoned following deadly protests earlier this year. Well, it's just gone 8:30 a.m. Thursday morning across the Emirates. It's 3:30 Thursday afternoon here in Sydney. I'm Paul Allen in for Jemima Besetche, who's away on assignment today.
And I'm Jennifer Zabasaja in Johannesburg, where it is just gone 6:30 a.m. Welcome to Horizon's Middle East and Africa.
Let's take a look at how some of the major assets that we're tracking are faring today. We've got futures in the US looking a little bit softer. It was a very positive day on Wednesday for US markets. We've got the S&P, in fact, closing at a record high for the 56th time this year. Jay Powell, the Fed chair, saying that the US economy is in good shape. But we heard from a couple of other Fed speakers as well. Mary Daly saying there's no sense of urgency to lower rates, so playing into that possibly higher for longer narrative. Got the 10-year on the US there at 418.97 at the moment. The yen backing off a little against the greenback, and of course we're looking at Korean stocks as well. Not a great day for the Kospi. It's only off by about 0.4% though. We also heard from the Bank of Korea Governor Ri yesterday saying an extra rate cut is unlikely even in the face of this political turmoil. Another thing we're watching, of course, Bitcoin finally did it. It's cracked through that $100,000 psychological barrier and pushing higher, in fact. Now, it was above 103,000 a short time ago, pulling back a little bit since then, 102,657. And we've also had the news that the new SEC chair, well, if his nomination is successful, of course, it's going to be Paul Atkins. Well, let's check in on how markets in Asia are faring. Avril Hong is in our Singapore studio. Avril.
Yeah, Paul, we're seeing those gains in other parts of Asia, in Japan, not quite in China or South Korea, as you just alluded to. And this is tracking Wall Street's gains, given Powell's bullish outlook of the U.S. economy. But I also thought I would highlight what we're seeing in dollar-yen, because we did see a bit of weakness coming through for the Japanese currency. And this was against the backdrop of some local media reports. GG Press seemed to add to the view that we might not actually see a rate hike from the central bank later this month, because according to the report, some of them within the BOJ are trying to avoid a premature move. And certainly we also heard later on from the most dovish among the BOJ board members, Nakamura, and he talked about how they need to be careful when tweaking easing. So perhaps also adding to that view and affecting what we're seeing in terms of the market's pricing of a BOJ rate hike later this month. That's come down quite a fair bit. And we're seeing the Nikkei, as I said, among those gaining ground in the region today. Guys.
Thanks so much, Avril Hong in Singapore for us there. Let's get back to the U.S. Fed Chair Jerome Powell says he's bullish on the U.S. economy and expects officials can move cautiously as they continue lowering interest rates. Powell also downplayed the prospects of tension with the upcoming Trump administration.
There's a set of institutional relationships between the Fed and every administration. I fully expect that we'll have the same general kinds of relationships that we have, institutional relationships, for example, with the Council of Economic Advisors, but most importantly with the Treasury Department.
Joining us now is Giorgio Pradelli, CEO at EFG International in Dubai for us. So, Giorgio, great to have you on. So we just heard there Jerome Powell expressing confidence not only in the incoming administration, also in the state of the U.S. economy. Is that enough to solidify your confidence in the economy?
Well, good morning, first of all, and thank you for having me here in the show. Well, yeah, we are quite positive about the state of the economic affairs globally. I think the U.S. obviously is driving the pack, and the economies seem very resilient. We see also very strong growth in the Middle East, where I am today, and obviously in the belt with the South Continent and leading into Singapore and Southeast Asia. And we would not discount China neither. Now, we see a bit of weakness, obviously, in Europe, but I'm sure we'll talk about that in a minute.
Well, Giorgio, let's just get into it, because overnight, of course, we're paying close attention to what is happening in France. How much of a concern does that dent your overall perspective and your exposure then to the euro economy?
Well, obviously, we have seen, I would say, since after the COVID and then the war in Ukraine, that clearly the economies in Europe are quite weak. We have seen stagnation. We have seen the biggest economies in Europe not doing very well, and this has been something that it was clear. Now, this crisis in France is just another symptom that the situation remains quite problematic. Now, in terms of our clients and our investor, clearly we always say to diversify, and a lot of our clients are very well diversified. And as you know, it is clear that growth is in other parts of the world.
But Giorgio, how do you diversify in a market that is so uncertain right now? It's not just France, it's also Germany. I mean, where do you look to sort of stem some of the weakness that we are seeing in the two biggest economies in the euro area?
Well, when we talk to some of our clients, obviously some clients remain, especially in Europe, also linked to their markets, but the majority are very well diversified internationally. Now, this is an anecdote, but I recall being in one of the European capitals, and I say, how do you play the continental European market? And they just answer, we don't. We go to the US, we go to the Middle East, we go to Asia. So clearly, again, we should not put everything in the same basket, but for sure at the moment, it is, the growth prospects are less there. Clearly, the bond markets could remain quite interesting if you are a euro investor. So there is a bit of diversification there. But as we have seen in France, this can go also the other way. So at the moment, we are underweight Europe.
Giorgio, let's talk about Asia. South Korea obviously going through its own set of political turmoil there. When you think about what markets you want to be exposed to, is South Korea one of them? Is China one of them? Where are you looking?
No, look, obviously this is something that, to be frank, we didn't see coming. Clearly there is volatility. This is another reminder that we left a situation of there is no alternative. The TINA years are gone. We are now in a situation of a lot of volatility, uncertainty. This was a clear reminder. For us, Asia remains a very interesting area. We are growing very well. For us at EFG, it is the fastest growing region at the moment. Now, we would not discount either China. I was in Hong Kong a couple of weeks ago. But clearly, you need to navigate these choppy waters very, very well and being very, very selective.
Selective, does that mean you stick in tech, or would you consider broadening out?
No, being selective means looking very well at where to invest, both in terms of the big caps and the small caps and the countries you choose. Our investors, again, our clients are, they can diversify. They don't need to be linked to a specific country. So clearly, the good news is that the markets did not react very much to what has happened in South Korea itself. So I think we are pretty positive, but again, you don't want to look for trouble. So maybe look for safe harbors is better.
Giorgio, finally, there's a lot of known unknowns heading into 2025. I wonder if there's anything that you are confident about in terms of where you'll be seeing the most returns in 2025, especially given what we've seen in 2024.
Well, we remain very constructive and positive about the state of financial markets overall. We think that the economies remain very resilient, and what has been good is that the market growth has been not only concentrated in few stocks like it was at the beginning of the year, but it has spread out. And we see small caps, for example, doing a comeback, not only in the US, but globally. So overall, we are quite positive about the markets going forward. And we see also that the bond markets that were dead a few years ago are back in, and the curve is steepening. This is always good for carry trades. A lot of our clients like to leverage their financial assets and take, as we call them, lumber loans. So we are pretty constructive about the prospects for 2025.
Wonderful to get your insights. Giorgio Pradelli, CEO at EFG International, joining us there in Dubai. Thanks.
Well, General Motors says it will incur more than $5 billion in charges and write-downs from its China joint venture, as well as closing factories and restructuring operations. Let's bring in our transport reporter, Danny Lee. So, Danny, big changes coming. What are they for GM in China? What's the plan?
So, for GM, this is the cost of having to write down a business and restructure, given its struggles in the world's biggest auto market, a market where it's struggling to compete against newcomers and new emerging bigger players, dominant players like BYD, such homegrown players, which means it's being squeezed out of the market. And as Mary Barra had said earlier this year, this is a race to the bottom, and something where it is being squeezed out of. So therefore, it's having to take charges and write-downs, and in particular by taking charges on closing factories in China and also cutting unprofitable models. There is also the fact it's also writing down part of its joint venture in China with the state-run SAIC Motor. And it kind of just sums up the dire straits it is in, and just the latest in a number of the legacy automakers who are feeling the impact of tough competition in China and having to find a way out at a right-size kind of level for a business.
Yeah, the GM CEO are pulling no punches, calling it a race to the bottom in China. Is what they're doing going to be enough? And what does the future hold for the company?
I think the jury is out here, but GM is confident that that $5 billion in write-down and charges will be enough for it to turn profitable again. But this is also for them saying that they're confident that they don't have to put in additional capital investment. But we have seen so many gyrations, as I've said, with the likes of Nissan, Stellantis and Volkswagen, all becoming casualties of this global struggle in this transition to EVs. So it remains to be seen. And given the longer-term future up until 2027, when GM's contract with SAIC runs out, how much bigger or how much smaller it could be by 2027, and in the long term, its test of patience in somewhere like China will be closely watched.
All right, transport reporter Danny Lee there in Hong Kong. Still to come, Saudi stocks have underperformed emerging market peers this year, but could they be ripe for a rebound? That's up next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Paul Allen in Sydney. Saudi stocks are trailing emerging market benchmarks for the first time since 2020. But some investors see reasons why next year could turn out better. Here with the details is Bloomberg's Farah Al-Batrawi, who joins us from Dubai. So Farah, how does Donald Trump's election fit into expectations for outperformance?
Good morning, Paul. Well, there are some expectations that Donald Trump's election will, and his term, and rather, will bring volatility to global markets, especially with his proposed trade tariffs on countries like Mexico and China. And Saudi Arabia is just not in the crosshairs of that, which makes it a potentially compelling emerging market investment for those who want to rotate their money out of these countries that could seek that could eventually be in the line of those potential tariffs proposed by the president-elect Donald Trump. So again, Saudi Arabia is seen as a benchmark that could potentially benefit, especially if you're a stock picker next year, with a lot going on in the economy in terms of government reforms and expectations for growth. But also on the flip side, the currencies in the Gulf are pegged to the dollar. So even a stronger dollar on the back of, again, Trump's election would actually not impact Saudi to the same extent it would impact other emerging market peers.
So what do valuation levels look like, and how's the economic outlook going to affect the market next year?
Yeah, so valuations have actually pulled back quite a bit from the 5-year average and from the highs that we've seen earlier this year. So just to give you some numbers, the Tadawul All-Share Index is now trading at about 15 times forward earnings. Earlier this year, it was trading at 18.5 forward earnings. Now, it's still at a premium to other emerging markets, but that's just typical of Saudi Arabia. But it has pulled back, and a lot of investors are saying that these are actually potentially compelling entry points with the valuation pulling back into the Saudi market. And in terms of the economic outlook, again, Vision 2030 continues to be a key driver for the Saudi market. A lot of investors say that oil prices pulling back is already priced into the market, and the focus should be on growth moving forward. So again, from all of our conversations with investors, there are some pros, there are some cons, but it just seems that this underperformance that we saw in 2024 is unlikely to repeat in 2025, again, due to Trump's return, due to the fact that valuations are pulling back, and due to the fact that just its currency is pegged to the dollar. So a stronger greenback really won't impact the market over there in Riyadh.
All right, Bloomberg's Farah El-Barawi, thank you. Still to come, Kenyan lawmakers agree to reinstate tax measures that were abandoned due to protests. We'll have more on the country's plans to raise revenue and lower its budget deficit next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. To Kenya now, where Kenyan lawmakers have approved the reinstatement of some tax measures previously abandoned after sparking protests. The new measures are part of plans to raise revenue and lower the budget deficit as required by the IMF. Bloomberg's Ndiro Oganga has been following this story for us, and she joins us now. So, Ndiro, talk us through the new changes in these taxes and how we're likely to see it play out in Kenya.
Hi, Jen. So lawmakers have agreed to increase certain taxes, including import tax from 1.5% to 2%, and also minimum top-up tax for multinationals whose effective tax rate is 15%. The goal here is to raise revenue, reduce budget deficit in line with an IMF program that Kenya is currently under. However, some tax proposals were rejected, including 10% levy on infrastructure bonds, because members of parliament are arguing that this will drive away investment at a time when Kenya is in dire need of this foreign capital. And there's a lot of criticism that is piling on the government, including concerns that taxes do not measure to an increase in revenue. And we're seeing that government's revenue is shrinking. It shrank by 5%, and they missed their target by that number, while public debt is mounting. And so President William Ruto and his administration have to walk a really tightrope of trying to raise revenue, plug the budget deficit by increasing taxes very carefully, while also borrowing externally to ensure that they balance the budget.
How have we seen this affect the economy, Ndiro?
Jen, this affects cut across different sectors across the whole country. Kenya Association of Manufacturers tells Bloomberg that most of their members are operating below their capacity, and 60% have frozen their expansion plans because these new taxes are weighing down on these businesses, and also they're reducing competitiveness in the market. You're seeing Kenyan products becoming more and more expensive by the day, and imports are becoming cheaper and cheaper by the day. And their point of concern is that every new fiscal year comes with new taxes that affect their bottom line. Hence, the tax policy environment in Kenya is extremely unpredictable. And this is coupled with other challenges, including energy. If you look at the cost of electricity in Kenya, it's 70% more than its neighboring countries. And this has affected the sector. Their contribution to the GDP has reduced to 7%, and it has stunted their growth to about 2%. So they're dealing with an unfavorable business environment.
And Ndiro, it's been fascinating because obviously you've been covering this since we did see those protests breaking out earlier this year. What's the expectation from the public? What are you hearing from people who are on the ground about how they could potentially receive some of these new changes?
Jen, there's heightened awareness across the country. For the first time this year, Kenyans are following the news day by day, trying to keep tabs on the latest development, because these new plans and proposals of taxes by President William Ruto has been eating into their pension day by day by day. And we saw this awareness even in Parliament, where they rejected the proposal to increase taxes on telephone and internet services from 10% to 20%. That just goes to show you that everybody understands how fragile the political environment is, and nobody wants to do anything that is going to spark protests. Earlier on in the year, we saw deadly protests that led to 60 fatalities because the president was proposing taxes that were supposed to raise $2.7 billion. They were forced to shelve that, dissolve parliament, and now whatever it is that they're doing it very carefully so as not to tip that barrel.
Thanks so much for your reporting. As always, Bloomberg's Ndiro Oganga in Kigali, covering the story for us in Kenya. Thanks.
All right, let's take a look at how futures are tracking ahead of the US Open. It was a very positive day for US markets. We did see the S&P 500 heading to its 56th record close of the year, and it was once again led by a big rally in US tech. So we're seeing a modest pullback at the moment in S&P futures. Nasdaq futures also off by about 0.1%. Euro stocks futures are also in slightly negative territory because, of course, we are watching very closely developments in France today. We will hear from French President Emmanuel Macron at 8 p.m. Paris time. He will give an address to the nation. Regardless of all the turmoil that we've seen in France, Emmanuel Macron is in no real danger. He says he intends to remain president until his term expires, and that doesn't happen until 2027. The next few months, though, could be kind of difficult for France and the Eurozone. Because there can't be any fresh parliamentary elections until the middle of 2025. So the parliament is the parliament. We don't have a budget. It's going to be an interesting path ahead. Let's take a look at the oil price as well, because it is also the OPEC Plus meeting later on today. We've seen WTI futures trading in a very narrow range, really about $6 between the peak and the low. Volatility has really been reducing. It's now at its lowest level since August. We also had crude inventories easing more than expected last week by just over 5 million barrels. So a tricky decision for OPEC Plus, really at the mercy of whatever it is that the incoming Trump administration is going to do in terms of US production. All right, coming up in the second hour of Horizons, Todd Boehly is going to be joining us of Eldridge Industries. He'll be talking to Jumana in Abu Dhabi. Stay with us, that conversation coming up. This is Bloomberg.
This is Horizons Middle East and Africa, our top stories this morning. South Korean policymakers urge calm in financial markets after the nation's political upheaval. President Yoon Yeol is reportedly set to face an impeachment vote as early as Saturday over his shock declaration of martial law. France plunges deeper into crisis. President Emmanuel Macron is now seeking a new prime minister after a no-confidence motion was passed against his government. Plus, coming up, Jumana speaks with Eldridge Industries CEO and Chairman Todd Boehly on the sidelines of the Milken Summit in Abu Dhabi. Good morning to you. It is just gone at 9 a.m. across the Emirates, 7 a.m. here in Johannesburg, where I am. I'm Jennifer Zabasaja. Welcome to the second hour of Horizons Middle East and Africa. There are plenty of stories to digest, a lot of political developments that we've been seeing, but let's take a look at how the markets are positioned ahead of the trading day today. If we start with U.S. equities, not doing too much right now, little change, still seeing S&P futures, though, above that 6,000 print. And Wednesday was really a strong day for U.S. equities. We saw both the S&P and the NASDAQ notching new gains. The S&P actually closing at its 56th record in 2024. Futures, though, right now, little change. The 10-year yield in the U.S. is also very close. We're paying close attention to that, of course. Right now, pretty stable right now at 4.19%. We're taking a look at what Fed Chair Jerome Powell did say on Wednesday. In particular, he's giving his vote of confidence to the U.S. economy, saying that it is in good shape. And so the 10-year yield positioned there right now. We're also watching closely what the euro is doing. The euro dollar cross up on the screen right now, still holding at that 1.05 point, but still that even coming despite the toppling of the French government overnight. And of course, we have Brent crude on the board, just over $72 a barrel, steady heading into that OPEC Plus meeting. And yet the story here really is U.S. oil production still expecting to offset any potential moves by OPEC Plus to curb supply. Potentially we get those announcements today, but we're waiting to see really what this means for 2025 and whether we continue to see crude prices trading range bound. And we're also paying very close attention to what we're going to show you with this terminal chart, and that is Bitcoin finally cracking that $100,000 print. Now it's you can see it's 103,330. You know, it keeps going up really, and this is just following the news that we got overnight, also from President Trump about his pick of a pro-crypto official, that is Paul Atkins, for SEC chair. Potentially, we continue to see more drivers to drive Bitcoin Bitcoin and crypto in general further up. But let's take a look at where assets in Asia are, in particular Korean assets, amid the political turmoil in the country. We have Avril Hong standing by in our Singapore studio. Avril, how is it looking over there?
Yeah, Jen, we've been seeing how South Korea's stocks, currency, more or less stabilizing from the Tuesday turmoil. So the question is, where do things go from here? And there's also some lingering doubts about who or which of these asset classes, I should say, might perform more poorly. And for this, our stocks team has actually done some analysis going back to 2016, 2017. This was another period in South Korea where politicians were similarly seeking the impeachment of then President Park Geun-hye. And it's interesting, they highlight that over this period, because there was a couple of months where this issue kind of dragged on for, South Korea's stocks actually managed to clock gains while the won declined. So there is some suggestion we could see more of the same this time around. Don't forget, the growth backdrop this time around is a lot more poor, and we are also seeing potentially these concerns about stock market outflows. We've seen about $14 billion worth already in the past couple of months, and that might actually exacerbate the weakness of the Korean won. So these are among the dynamics that we are watching across asset classes as we keep an eye on developments in South Korea. Jen.
Great. Avril Hong in Singapore. We will check back in with you in just a bit. Let's stick with South Korea, though. South Korean President Yoon Yeol is reportedly set to face an impeachment vote on Saturday after the fallout from his martial law debacle. Meanwhile, the Bank of Korea is optimistic that market volatility will gradually cool down. For the latest, let's bring in our chief North Asia correspondent, Stephen Engel. Stephen, great to get you on. You have been covering South Korea for years. Talk to us about what this latest development means and what your expectation is for how things might play out over the next few days.
Yeah, it is quite shocking, obviously, as people have, as these shockwaves have reverberated not only across Korea, but around the world. And you're right, I've been out in Asia 34 years and have covered China, Korea, Japan, mostly in North Asia. I've seen the, flourishing democracy in South Korea after those years of martial law in the 70s and then early 80s, followed by the Gwangju massacre. And then, of course, up to the 1988 Summer Olympics in Seoul that really ushered South Korea's democracy onto the global stage. So that's why when President Yoon on late Tuesday night issued this decree of martial law that lasted about 6.5 hours before, of course, lawmakers basically voted it down, and President Yoon backtracked from that. It sent the country into turmoil. I mean, I've heard stories coming out of Seoul where many young people who didn't even know the term martial law, they were Googling or the equivalent in Korea trying to figure out what this necessarily means, because it's essentially, according to the opposition, said it was a treasonous move and illegal, and those are the grounds that they're going to be taking for that vote, supposedly in 2 days' time on Saturday, December 7th. And that's why perhaps today we were going to hear from the president either apologizing or doubling down or kind of rationalizing again the decision on late Tuesday night. But now, if it's true, if local media reports out of Seoul are true that the impeachment vote is going to happen Saturday, perhaps the ruling party right now is taking these next 2 days, get their ducks in a row, figure out how they're going to ward off this vote and also ward off ruling party lawmakers from defecting, because by calculations, they need 2/3 majority of lawmakers in the National Assembly to vote for impeachment. And that would mean about 8 ruling party lawmakers at least would have to switch sides. So it's going to be a lot of political jockeying over the next 48 hours or so.
Wow, really great to get your insight considering how long you've covered it. Our chief North Asia correspondent, Stephen Engel, there for us. Thanks so much, Stephen. Now let's pivot to the Middle East. The 6th annual Milken Institute Summit is bringing together senior executives, investors, and government officials, and it's kicking off today in Abu Dhabi. Let's get over to Jumana Bursachi, who is in Abu Dhabi covering that this morning. Good morning, Jumana.
Hi, Jen. Good to see you. Yeah, we're here in Abu Dhabi. And sitting alongside me right now is Todd Boehly, the CEO and chairman of Eldridge Industries. It's great to have you with us on the show this morning. But you also have a big announcement. You have put out a press release saying that you are putting forward plans to launch Eldridge, an asset management and insurance holding company, plans to launch in January. But just tell us about what you're envisioning for this fund.
Well, thank you very much for your time, and it's great to be here with you in Abu Dhabi. It's always a treat to come to this part of the world and get so excited to see all the great things that are going on here. So, we are now consolidating our asset management activity. Over the last decade or so, we've been building specific businesses that have been focused on whether it's private credit with Marathon or equipment financing and leasing with Stonebriar. We have Security Benefit, one of the leading retirement platforms in the U.S. So because of the themes and the trends that are going on and the value of scale, we're now consolidating all of that and putting it under one holding company. And when we launch in January, we'll have about $70 billion of assets under management.
And you say it's not going to launch until January. From now until then, have you been in conversations with investors from the region? Are you looking to sell a stake potentially?
We're absolutely trying to be strategic. So we're looking for partners who want to grow with us. And obviously this region, we're about to open our first office here. So we'll be doing that also at the start of the year. So I think the combination of the excitement that's going on here, we believe that this is going to be one of the most important places in the world over the next several decades. So the combination of being able to develop the relationships here and also build businesses together. We've been in business with many people in the region for a long time, and now we want to continue to extend and expand those relationships.
Yeah, well, you talk about opening offices here. That's also in the press release. You have offices all around the world, but also have plans to open up an office in Abu Dhabi. Why Abu Dhabi?
We believe that the region is extremely important, and we think Abu Dhabi is a great first place to put our first Eldridge office. But we have plans to continue to develop our offices in the region and have a much bigger presence on site.
Yeah, Saudi Arabia potentially. I know lots of investors are having conversations about opening up a regional headquarters there. So potentially something for the future too?
Absolutely. I think, if you look at where the big opportunities are, I think developing sports and entertainment and infrastructure and media, those are all big opportunities in the region, and in particular in Saudi Arabia, because they have so much infrastructure to build.
Yeah, so I want to pick up on that actually, particularly on the sports side of things. We know that in this part of the world, they've really been making a big push into sports in various different domains. Also, you're actively involved in ownership of various sports teams around the world as well. Do you see an opportunity to invest in sports and sort of to work in parallel with what the authorities are trying to do here?
Absolutely. I think, again, the thing that really has to be built is a lot of infrastructure. And I think the opportunity to build sport infrastructure, we have a project in D.C. called the St. James. And it's a several 100,000 square foot athletic facility that now is acting as a school, is acting as a place for camps, is acting as a great place to go, because there's very few facilities that have the scale and the size. And ultimately we see that being able to be exported all around the world, in particular to this part of the region, as they really go deep on how do we develop our sport industry, how do we develop our youth. And given the average age of the people in this part of the world, we just think there's so much opportunity to build sports infrastructure.
Yeah, and in previous interviews, you've talked a lot about the ability of businesses to actually build up scale. Do you see that potential in this part of the world? Because, of course, there's a lot of focus on beefing up the potential of these certain industries that we talk about. But at the same time, it's not as populous as other parts of the world. Are the demographics working against you here?
I don't think so. I think if you look at what needs to be built relative to what's has been built and what the aspirations are, and the fact that this is an area that's attracting people. People are coming here for all the energy and all the goodness that's the opportunity that's here. Very stable leadership, very young leadership. Yeah. A really bright future.
Yeah. Let me take it to sort of broad macro and the outlook for next year. I've spoken to several industry leaders over the last month, even before the elections, by the way, and people seem to be quite optimistic about the possibility for deal making and M&A activity to resume in 2025. How do you see the outlook?
I think people are really excited about the where the markets are. I think they're really excited about the landscape for investment. I think they're happy that the election's over and we're now moving on and back to kind of business again. I think the interest rate environment is settled into a place where people start to feel like there's a lot that can be happening again. So we're very bullish on M&A. We're very bullish on the activity, the velocity of capital moving around going forward. So I think we're excited to be involved in the financial markets next year for sure.
Yeah, and how do you think about the potential for a higher interest rate environment? Yesterday we had the Fed Chair Jerome Powell talking about moving cautiously with interest rates. I think now people are sort of coming around to the view that maybe inflation will be higher than what was previously envisioned for 2025. How does that have a knock-on effect to your portfolio if we are going to be in a higher interest rate environment for foreseeable future?
Well, one of the things that we were able to do is we owned, a third of our assets are in floating rate assets.
Yeah.
So as rates have moved, we've been able to benefit from that in a pretty significant way. I think going forward, a 10-year that sits between 4 and 4.5%, is more normal than people feel because it's been such a low interest rate environment for so long. But I think as the front end of the curve comes down and the 10-year stabilizes between 4 and 4.5, I think we see that that's a more normal environment than a 10-year that's at 2%.
Yeah. Well, you say a third of your portfolio is in floating rates, so presumably you're talking about private credit there. There's a lot of hype around private credit. Is there too much hype, do you think? Or are there too many tourists now in this domain?
I think that the asset class itself is very robust. And I think the definition of private credit is one that has evolved. I think the reality is senior secured bank debt has been private credit. It's called broadly syndicated bank debt, but it's actually private credit. I think the evolution of the markets I think will continue to allow for more and more private credit. But as private credit becomes a solution, it's just one more option. All right. Yeah. So I think we're going to continue to see markets embrace private credit, whether it's asset finance like at Stonebriar or private corporate credit like at Marathon. We think that those are big opportunities in markets that are continue to develop, especially geographically. Yesterday we were with the Minister of Investments in Saudi Arabia, and they're talking about how do we develop our credit markets. And so I think there's more and more opportunity. I think you're going to see more and more deal flow out of Japan. So we think the credit markets around the world are just going to continue to develop and evolve.
Yeah, interesting. And there aren't that many asset classes out there where you can still get double-digit return. Final question for you. What keeps you up at night? What are you most concerned about going into 2025? What is the biggest risk?
I think obviously geopolitically, there's a lot that no one can control. And I think that we're very hopeful and aspirational about the resolution of the challenges that we see, and are hopeful that our representatives are looking to kind of resolve these things and figure out how to coexist more peacefully. Because I think if we can sort that out, then everything else is pretty easy.
Yeah, that's a very valid point. Todd Boehly, we'll leave it there. Thank you so much. That was the CEO and chairman of Eldridge Industries with a big announcement this morning. I'll toss it back to you guys.
Thanks so much, Shumana. Great interview there. Now, still ahead, we'll discuss South Africa's shock third quarter economic contraction with Anthea Gardner, founding partner at Cartesian Capital. That's later in the show. She's here in studio. Up next, though, we are live from Paris as Macron's government is toppled. Stick with us. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Emmanuel Macron is looking for a new prime minister after the far right and left united in France to push through a no-confidence motion against the government. The French president needs a premier who can pass next year's budget through a deeply divided parliament. Let's get more from Bloomberg anchor Kriti Gupta, who is in Paris and has been covering this story. So, Kriti, what is next? I mean, where does Macron go from here?
Yeah, Jen, we're in uncharted territory when it comes to the French government. This is a no-confidence vote that was even put forward for the first time since 1962. Michel Barnier, now the shortest tenured prime minister in modern French history. This is a massive deal, and that's why what comes next is a little bit hazy. But basically, Emmanuel Macron has to go back to the drawing board and find Michel Barnier's replacement. Now, there's a couple of candidates here that he's thinking about. He's thinking about two former prime ministers, Bernard Cazeneuve, as well as Jean Castex as well, not to mention his current defense minister or minister of armed forces is what they call it here, as well as they're kind of a major centralist veteran, Central Party veteran who currently is the high government of the high government official of central planning. These are some tricky titles here, but you can see that on your screen in terms of who the potential candidates actually are. There is even the possibility that as a caretaker prime minister, Emmanuel Macron brings back Michel Barnier. However, Michel Barnier made the point that if I just got ousted, wouldn't it confuse the French people that I came back? And that's the concern that Emmanuel Macron has to deal with, that basically Marine Le Pen may be putting pressure and maybe looking to undermine Macron at every turn, regardless of who he puts forward at a time when the French budget really needs to get passed through.
Right. Not sure how that would go over if Barnier is just put right back in. Kriti, give us a sense of how the market is taking all of this right now, given the levels of uncertainty that we're seeing.
Well, the levels of uncertainty really, as I said, come back down to the budget. And that's what the markets are going to be eyeing the most, because as he picks this basically new caretaker prime minister, he has to put into effect a loi spéciale, basically a special law talking about including the 2024 budget into 2025. What that does is create some very austere and strict spending habits. It means that the 2024 budget is the only funding you get for the first couple of months of 2025. And that's what the markets are going to be responding to. This idea that you will not only be increasing the deficit because you're not pulling back, but perhaps even some of the pressure on households, the tax income, even the big move to spend on things like defense, that all gets cut short. And right now, you may be seeing a little bit of calm on the surface, but the question is going into the holidays, how much of those changes in the actual legislation do you see? And that's where you could see that risk premium between French debt and German debt widen as high as 100 basis points. A trader here in Paris, though, told me that it's slow and steady. It's not a shock to the system, and that might be what saves the French assets.
Wow, uncharted territory, definitely. Bloomberg's Kriti Gupta in Paris for us with the latest. Kriti, thank you so much for your time there. Now, coming up, Bitcoin tops $100,000 as Donald Trump makes his pick to lead the U.S. Securities and Exchange Commission. More details on that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. President-elect Donald Trump has picked Paul Atkins to lead the U.S. Securities and Exchange Commission. If confirmed, Atkins will replace Gary Gensler, whose focus on climate risks disclosures, crypto crackdowns, and stock trading regulations drew resistance from Wall Street. Bitcoin finally topped $100,000 earlier today. The total crypto market has surged by about $1.3 trillion since Trump became president-elect. Also, Brian Thompson, the CEO of United Health Group, has been fatally shot in Midtown Manhattan in what authorities described as a targeted attack, igniting a manhunt across the city for the gunman. Early reports suggest the alleged attacker was waiting for Thompson upon his arrival at a hotel for the company's investor day. The attacker approached the executive from behind and shot him multiple times before his gun malfunctioned. And finally, Amundi is said to be interested in acquiring control of Allianz Global Investors as deal-making heats up in Europe's asset management industry. Sources tell Bloomberg Amundi has been holding on and off talks with the German insurance giant for several months. Possible structures could include a full acquisition by Amundi or a combination, leaving Allianz with a sizable stake. Now, coming up, Syria's military pushes back against advancing rebel forces. The latest next. This is Bloomberg. This is Horizon's Middle East and Africa. Our top stories this morning. South Korean policymakers urge calm in financial markets after the nation's political upheaval. President Yoon Yeol is reportedly set to face an impeachment vote as early as Saturday over his shock declaration of martial law. France plunges deeper into crisis. President Emmanuel Macron is now seeking a new prime minister after a no-confidence motion was passed against his government. And U.S. President Joe Biden concludes his trip to Angola with a tour of the Lobito project, a railway set to deliver critical minerals across the continent and beyond. It has just gone 9:30 a.m. across the Emirates, 7:30 a.m. in South Africa. I'm Jennifer Zapasaja in Johannesburg. Welcome to Horizon's Middle East and Africa. Thanks so much for being with us. There's a lot to digest when it comes to geopolitical news, but also what the markets are reacting to. So let's just take a look at where they are. U.S. futures right now, little change, but Wednesday was really a strong day for both the S&P and the NASDAQ, both notching new records. The S&P actually closing at its 56th record for 2024. Right now, still above that 6,000 print. U.S. 10-year yield is also in focus. We're seeing it right now just at 4.19%. On Wednesday, we did get some commentary from Fed Chair Jerome Powell giving his vote of confidence for the U.S. economy, saying it is in good shape. We'll wait to see the jobs print later this week and some other data prints to see how that might affect any sort of sentiment around the U.S. economy. We're also watching euro dollar right now, still positioning at 1.05, and it has been for the past few days, that even coming despite the toppling of the French government. And Brent crude on the screen right now, steady, surprisingly steady actually heading into the delayed OPEC Plus meeting that is happening today, just above $72 a barrel. We've been talking about U.S. oil production expected to offset any moves by OPEC Plus to curb supply, still keeping crude prices, though, pretty range-bound when it comes to moving closer into 2025. And our terminal chart for the day, it has to be Bitcoin, because we've been waiting for this moment. Bitcoin finally cracking that 100,000 print, just above that right now at 103,000 over that. And that is coming after we did get the name for who President-elect Trump is picking for the SEC chair. That is Paul Atkins. He is known to be pro-crypto, so potentially giving that extra driver to the cryptocurrency this morning. Now let's check in on how markets in Asia are faring. Avro Hong is standing by in our Singapore studio and watching them all. Avro, how's it looking?
Yeah, it's a mixed bag, Jen. We're seeing how China as well as South Korea continue their underperformance for the Kospi. This is an extension of the 1+% declines from a day ago as investors keep an eye out on the political uncertainty in the country. Markets have stabilized, though, since the late Tuesday turmoil, that onslaught that really hit the Korean currency as well, because of how financial authorities have been quite quick to calm the markets, talking about how, unlimited liquidity could be unleashed. But I also thought I'd highlight what we're seeing in other parts of Asia. It's interesting how earlier stocks in Japan, Taiwan, they seem to be riding the tailwind from the positive Wall Street handover against the backdrop of Powell's comments on the bullish U.S. outlook, but that seems to have fizzled out a bit. The Nikkei is paring gains. Dollar yen also in focus. There are some local media reports which are in a way muddying the outlook for a BOJ rate hike later this month. So dollar yen has moved away further from the 149 handle. Jen?
Thanks so much, Avro Hong in Singapore for us. Let's turn to the Middle East, where Syria's military is pushing back against rebel forces advancing on the crucial city of Hama, with their sights set on the capital, Damascus. The rebel group are posing the biggest threat to President Bashar al-Assad's rule in years. Meanwhile, Moscow says Russia, Iran, and Turkey are in close contact over the conflict in Syria. Let's bring in Bloomberg's Dana Kharish, who's in Dubai and covering this for us. So, Dana, what would this mean if we do actually see rebels advancing to Hama and potentially even capturing it?
Yes, good morning. Hama is very important strategically and symbolically. Strategically, it means the rebels are going to gain even more momentum and build on that which they have started last week and took most of Aleppo. They will move into Hama if that happens, and then that means it's a threat to Homs. Getting into Homs means they will have to clash with Hezbollah and Iran-backed militants there, and that means they're closer to Damascus, and that's the seat of power for Assad and vital seaports. So it's very strategically important for the rebels if they actually go into Hama and capture it. Now, it's also very symbolic. Hama also witnessed that 1982 massacre by Bashar al-Assad's father, Hafez, when he also crushed an uprising, protests against his rule. And Hama also had seen one of the biggest protests and uprisings in 2011 against Bashar al-Assad. And there were also thousands of people died there because of the fighting, and of course, which turned into a civil war. And this is why Hama is important symbolically and strategically for both the rebels and Bashar al-Assad.
Let's stick on the president right now. Could this potentially be a threat for his hold on power, Dana?
For now, yes, this is the biggest threat to Bashar al-Assad since, I would say, 2016 or 2020 even. Government forces held Aleppo since 2016, and in this attack that pretty much took everyone by surprise, took Aleppo in just a couple of days. And now he is deploying troops and asking, of course, for help to support his forces in Hama and back those rebels away. Now, his allies, Russia and Iran, are, of course, bogged down with other conflicts, Russia and Ukraine, and Iran, of course, seeing its most important ally, Hezbollah, getting very, very weakened. And in 2000, and back then, when Assad's rule was threatened, he asked, of course, Iran asked Hezbollah to intervene, and they intervened and turned the tide in the Syrian war. But now Hezbollah is very, very weak. His leadership decapitated. Most of its capabilities have been destroyed. And it is hard to imagine Hezbollah really fighting and turning the tide there in Syria as well. So it could either be down to fighting on the ground and who wins, or deal making, as we see from news that Russia, Turkey and Iran are in contact. And of course, Turkey supports the opposition and Iran and Russia support Assad. So it's either ground developments that would turn the tide here in favor of Assad or against him, or a deal-making prospect.
Great to get you reporting this morning. Bloomberg's Dana Kharish in Dubai for us. Dana, thanks as always. Now let's turn back to the region. South Africa's economy contracted in the third quarter, hit by a sharp drop in agricultural output. I'm joined now by Anthea Gardner. She is from Cartesian Capital, founding partner and hedge fund manager. Anthea, great to get you on. So this was a surprise for many analysts and economists. What were the indicators that were potentially missed? And are they still in place now? Could we see this continue to weaken the South African economy moving forward?
Morning, Jennifer. So more than a surprise, I think it was a huge disappointment. And the agricultural sector really shows that sector-specific disappointments can have such a negative impact. If you take the agricultural sector out, which I know we can't do, but then GDP growth was actually 0.4%. So it took off 0.7 percentage points. And I think the positive sentiment is still very much alive. So it shows in how the markets reacted. You know, the equity market continued to rally. The bonds came off a bit and the rand weakened, but generally sentiment is towards the fact that we can do this and we can grow the economy. Unfortunately, the last decade has been a bit lost. You know, we've averaged 1% GDP growth per annum, and it's just not enough because our population growth is outstripping our economic growth. And in fact, 12 years ago, GDP per capita was closer to $9,000. Today, it's just closer to $6,000 per person. And that kind of thing means that South Africans are actually getting poorer. And so, you know, what you want is to see real GDP growth. We've seen some positive spots. The finance industry sector contributed quite nicely, and even a bit of consumer spending has changed and helped this GDP economic growth number.
So what does this mean then going forward? I mean, where is the confidence coming from? Because agriculture is very much contingent on what is happening with the weather patterns, right? So that's not going away. What does this mean for 2025 for this economy?
Well, I do hope that the weather patterns we saw were hopefully a once-off or doesn't happen every year or every quarter. You know, so in the beginning during the growing season we had a drought, and then during the harvest season we had more issues, and so you have both sides of the coin being bad. But I think the positive sentiment and the change in political environment in South Africa should help economic growth. I still believe that government should implement structural changes. You know, we need to go from a budget that's really about social expenditure to a budget that's growth expenditure. So when you understand, right, where South Africa comes from. We don't really have the money to be a welfare state, but we need to implement things or issues or factors that drive change in the country. But at the same time, we can't forego structural growth expenditure.
So we've not seen that at this point from the government.
That's exactly
expectation. Right. Can we talk about, yesterday we heard from Fed Chair Jerome Powell saying that the U.S. economy is in good shape. Potentially that means the Fed can be more cautious. How does that potentially spill over into South Africa and other EMs? I mean, how are you looking into that?
It's great for us. We're very dependent on the global economy, and one of the problems with the GDP number we saw on Tuesday was, in fact, that exports and imports weren't as good as they were, or we were hoping them to be, and that talks to global demand. And so I think South Africa has a lot of resources that we need to realize, you know, we're not the poor African cousin that we want handouts. We've got resources that we can sell and we can offer it. And so actually I quite like that the US, the economy is strong, and that they will need to buy from us. And so it can only be good for us.
What about when it comes to China? Because that's also very important to the South African economy. It's been weaker than expected over there. I mean, could that potentially dent 2025?
Jennifer, this is an interesting topic because all the market commentators always complain or criticize the fact that China has not reached its 5% GDP target, but it's a self-imposed target. And so if they are getting to 4.8 or 4.5, then South Africa would love that kind of economic growth. And actually why it's such a bugbear for me is because I'd like to see our government self-imposing a GDP target growth. And a lot of people are saying that the Reserve Bank should cut interest rates more because inflation's come off so much. But that's not really the Reserve Bank's mandate. Their mandate is inflation targeting. And it should be our government's position to target inflation growth. So I think China's doing fine. I think as Westerners, we overly criticize China. And look, I like my freedoms like anybody else, but I'm happy that they're on 4.5 or 4.8% GDP growth per annum.
And let's just finish off your expectations then. You did mention we have seen relative stability when it comes to the Rand and when it comes to the JSE and others. Do you think that will continue heading into 2025?
I do, actually. I am very positive about the markets for 2025. It's difficult to say. You know, everyone's talking about what will Trump do when he gets into the White House, and will he implement all the threats of tariff increases that he's made? But again, in my view, you know, he's transactional. And so if South African government can take it from whence it comes and start negotiating with that in mind, we shouldn't have a problem. I think we'll be fine in 2025.
You're optimistic. Good to get your insights there. Anthea Gardner, Cartesian Capital founding partner and hedge fund manager, joining us here in studio in Johannesburg. Great to get you on. Thank you. Now, coming up, billionaire developer Hussein Sajwani tells Bloomberg that he plans to build data centers across Asia. We discuss the Damac Group's diversification plans and the broader property market in Dubai. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zapasaja in Johannesburg. Now, Damac Group plans to invest about $3 billion to build data centers across Southeast Asia as the region becomes a hub for AI and cloud services. Chairman Hussein Sajwani spoke to us about the Emirati company's expansion plans.
So we're focusing heavily now on data centers. So we have gone to Asia. We have data center under construction in Indonesia, Malaysia, and Thailand. And we're doing some data centers in Europe. So we already acquired the land in Spain and in Greece, and looking at some other European cities.
For more on this, let's bring in Bloomberg's Middle East finance reporter, Zainab Fattah. She is in Dubai for us. So, Zainab, where specifically is Damac planning to make those investments? We heard a bit there, but what is really driving this new push?
Well, they see a lucrative market. They see a lot of demand. And this demand is not only in Asia. Since they started this unit, EdgeNext, they have started building data centers in a neighboring market to us in Saudi Arabia, so in cities like Riyadh and Dammam. And we see the expansion into Asia, where they are planning at least 3 facilities in Thailand. The first facility will be starting operations in March. And you have also they have plans for Vietnam and the Philippines. And they see this as a way, the market as a large market at a time that we see the governments in Thailand and elsewhere, they want this foreign investment and this money to come in. In Thailand, the government specifically is trying to expand the knowledge industries there, and they're trying to catch up with other markets like Singapore and Malaysia on that front. So we've seen some investment into that, and obviously investors from the Gulf with money and looking for markets to diversify away from their heavy reliance on Dubai and the Middle East, a smaller market by population size, see Asia as a very lucrative market to get into.
And Zainab, let's just stick on real estate. You've written recently about the projections, in particular for Dubai's property sector next year. Are they good? Is this a good time for people who potentially are looking to find a way in?
This is the question on everybody's mind, and we've seen the market here on a phenomenal run since the pandemic, since 2020. And this year, we are looking at ending the year about 20% above where we were last year in values and prices. There is apprehension a little bit in the market, and we're seeing now a lot of consultancies looking at next year and expecting that we will start to see a decline in the pace of growth. So Knight Frank expects 80% increase in property values and 5% for the luxury end. But to give you an idea of where we are in this market, out of 530,000 homes sold since 2002 in select locations to foreign investors, 95,000 of those are actually now valued above $1 million. And that shows you just the run the market has been on since the past 4 years. Of course, before that, we had 7 years of declining property values, and we had a crash before then. So a lot of people in the market are looking at how long this rally will continue and what are the drivers behind that. The influx of people coming in and the influx of money coming in due to liberal visa policies, as easy regulations to set up companies and employ people here. Those factors are going to continue, but we'll see whether those predictions will come true next year.
Wow. I guess good for the market, not great for those not necessarily able to afford that, myself included. Bloomberg's Zainab Fattah, thank you so much for your reporting and for joining us this morning. Now, coming up, U.S. President Joe Biden pledges millions more when touring the Angolan port city of Lobito on his last day of his Africa visit. More on that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Some headlines just crossing the Bloomberg from an interview that South Korea's opposition leader is doing with Bloomberg's Sherry On. He's saying it may be difficult to pass an impeachment motion this week, but that President Yoon will be impeached eventually. He's also saying that investors should not be worried about the future of the Korean economy, and this could be an opportunity to buy Korean stocks at low prices. We've, of course, been paying close attention to what is happening there on the ground since earlier this week, since President Yoon Suk-yeol plunged the nation into a bit of a crisis after he initiated that martial law that was eventually overturned. But waiting to hear more from this interview from our Sherry On with the opposition leader there in South Korea. Now, let's pivot back to what is happening in the region. The Associated Press reports that U.S. President Joe Biden has said, quote, Africa is the future, as he pledged another $600 million for an ambitious multi-country rail project in the region. On his third and final day of a visit to Angola, Biden toured an Atlantic port terminal that's part of the Lobito Corridor redevelopment. For more on that, let's bring in Bloomberg's Ndiro Oganga, who is in Kigali, Rwanda, for us. So, Ndiro, how would you assess Biden's trip to Angola? What's been the reception?
Hi, Jen. So the goal here is to have American influence grow beyond Angola into the African continent. And the plan is to have, first, the Lobito Corridor transcend the South African borders. It's being referred to as the Lobito Trans-Africa Corridor, with the hopes of joining forces with the Tazara line that runs from Zambia all the way to Tanzania. And if they're able to do this, then they would have connected East Africa, Central Africa, and Southern Africa, which will be a big win for intra-Africa trade, as it will ease movement of goods, people and services, first of all, easing access and also reducing costs. There's also a big win for both countries. For the U.S., it eases access to critical minerals such as copper and cobalt that is critical for the EV industry. But on the other hand, for China, which is a leader in copper mines in Zambia and DRC, it just eases the logistic networks for them, and that improvement is a big win for them. However, there's a big elephant in the room. President Joe Biden is building bridges. He's more collaborative, but he's towards the tail end of his first term, and he's going to be a one-term president. In less than 7 weeks, President Donald Trump is coming into power, and he's been known to be very combative. If China and the U.S. can put their differences aside, this could be seen through, but if he's aggressive towards China, then prospects of this will fall apart.
Yeah, and Ndiro, I wonder what this means then for the U.S. Relationship with Africa more broadly.
President Biden is just stuck in his ways, and he's saying that it's time to change the outlook on Africa and be more collaborative. He says it's time to shift away from debt into development cooperation, more capital inflows into critical sectors such as infrastructure. And we saw this in 2022 during the U.S.-Africa Summit, where he pledged $55 billion to come into the African continent. 80% of that has already been honored. And he says 1,200 new business deals have been closed between African and American businesses to a tune of $52 billion. He raises questions over debt sustainability, saying it's unfair for Africa to be servicing debt at the expense of its people, and it needs a transparent partner. Will that partner be America? We wait to see under Donald Trump.
Yeah, many people are waiting to see what the future of that looks like. Thanks so much, Bloomberg's Ndiro Oganga in Kigali for us. All right, that is Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Stick with us for Daybreak Europe. That's next. This is Bloomberg.